And it looks as though Thomas Panos, we are live. Phil Tarrant, Tom Panos, Real Estate Exposed. Thursday afternoon, sun is shining. Lockdowns are easing, it would appear. Tom, what's going on?
Well, Phil, you know, as we're shooting this video now, it's going on YouTube, Facebook, LinkedIn, Periscope, and of course, people can hear this on the REB podcast, and I also believe this episode is going to be on smart property investment. Hello, Stan. Stan was our man on the ground last week in Canberra that was able to give us the scoop because he'd actually come out of a board meeting with the REI. Luke Moroney's coming on, and what is he saying? Buy. He's biased. He's a buyer's agent. Remember that. Alex Skipper, good to see you. Sean, good to see you. Luke, good to see you. Phil, we've got 3 or 4 topics we're going to touch on today. And I've got to say to you, you know, as we're shooting this live stream video right now, you know, we've just had the announcement, of course, in New South Wales. We've now hit over the $1,000 mark. I think I'm at an auction. We've hit over the 1,000. We've hit over the 1,000 people. The genie's out of the bottle, Phil. The genie's out of the bottle. Getting the genie back in the bottle is going to be hard. Paul Biller, one of the best real estate agents I know in the eastern suburbs, in your REB top 100. I think he's number 40. Emily, good to see you. Michael from New Zealand. It's great. We've got this, you know, regular audience coming in, and Phil.
It's all happening. We got some good feedback the other day as well. Someone texted you saying they like listening to us on a Saturday morning. We're on the Bay Run, I think it is. So it's good to know that people are listening to this, watching this, tuning into this all over the place.
I think, Phil, the combination of not just sitting there doing, you know, a training podcast or a personal development genre, one that we're actually, it's a bit like a magazine if you think about it. We're touching the fringes of stories that some people want us to go deeper in. But, Phil, we're going to start off with this story because News Corp asked me for my forecast of spring, and they said, when's the stock going to come on? You know, it's spring. But, Phil, I think we've got to accept it. The real estate behavior model has been disrupted. It is no longer a seasonal market. It is now a public health order market. It is not based on the weather. It's not based on the season of the year. It's based on what the Chief Health Minister has as a recommendation, as a public health order. And I'm afraid to say we're not going to see the Super Saturday that we see normally happen late September.
Well, no doubt, Tom. I'll take your read on this. You're a lot closer to us. We've been speaking about this for last month. Your sentiments, pulling John McGrath's sentiments as well, that when this lockdown's over, it's going to be heady days in real estate. It's just when this lockdown is going to take place. But I don't mind your line of thought with this. And I was going to ask you, Tom, do you actually pen your own articles that I read in the newspapers, or is that just you verbalizing it and someone else makes it sound good? Well, how's all that work, mate?
I'm going to show you exactly, because what you're going to see here is I use a thing called a Remarkable.
Yep, I know it.
Yep. So I got a Remarkable, which is a notepad, but it actually feels like not writing on glass. And I get my pencil out, which is that there, and I write it out. And in fact, what you'll see here is that I actually did it last night. I've got a bottle of red wine, and I went off and I wrote the story here, and then that story gets emailed from direct to the Remarkable to Susan. Susan actually types it out. From Susan, it hits a sub-editor at News Corp, and then they put it in. And I've got to tell you, they've told me that the stories that I've been submitting to them have been getting the highest views of all contributors, and the reason is that I speak and write in the same tone, and I don't use words that, you know, like instead of using the word consumption, I just say listen, right? I just use straight out talking. Instead of talking about an oversupply of absorption rate, I just say there'll be too much stock on there. And my view, Phil, my view is this: I'm worried. I'm worried because I think there's a lot of sellers that haven't come onto the market since the middle of this year. And then when the green light happens, that there's going to be all these listings and you're going to see realestate.com, domain.com, signboards everywhere. And that's going to be, for me, a buyer's paradise. And I know that you're a buyer, and I think that you've waited this long, and I'm out there, I'm looking as well, and I am closely having a look to see whether the oversupply of stock is going to be met by buyers. Because there is buyers out there. There's buyers out there right now. There might be a lockdown, but as Luke Moroney says, I like this one, always a buyer. That's a great thing. I'm always a buyer. I like that, right?
How you going, Luke? Luke's a good operator. How you going, Luke? You know what, Tom? Call you out on the fact that so you're going to say there's got to be an oversupply of properties. It's going to be more. There's going to be more properties than what there is buyers. Is that what you're saying when this happens?
No. So in real estate, there is a term called absorption rate. And absorption rate says how many days would it take for all the stock on the market to get sucked in by the buyers. So when you've got a lot of stock, the absorption rate actually becomes lower, right? Because what actually happens is there's just more stock to get absorbed. What I'm saying is that if you've got, for instance, 500 buyers that are ready and able to pull the trigger, and at that time, let's assume you've got 250 properties. What I'm saying is if you waited for the 250 to become 500 properties, it would mean that all of a sudden the seller doesn't have as much power because they're competing against other properties. And what I'm worried about, Phil, is let's assume that it's November, December, and the reason I'm coming to that conclusion, Phil, is the following. Where this is all a vaccination sprint at the moment. And if you actually have a look at what's going on, in England, the stadiums are full. Life has moved forward. So if you turn around and say our rollout, which was originally a stroll out, has now actually got pretty strong. Australia is doing extremely well in the last week in the vaccination stakes. So if you take that into assumption and we start looking that we're making progress, when there's a green light and the market opens up, you're going to have a lot of listings on the market. But what I'm getting at is the buyers have always been there. The buyers haven't disappeared. They're saying there's no stock. I'm not sure whether there's going to be an increase of buyers to match the increase of supply. That's what I'm saying.
Okay, so and therein lies the talent you have, Tom, when you're penning your pieces for News Corp, the simplicity of real estate. And we chat a lot about this, and this particular discussion today, Tom's going out on the Smart Property Investment podcast. Like, real estate doesn't need to be hard. Real estate doesn't need to be complicated. And people that overcomplicate real estate do it unnecessarily because usually they're getting some benefit out of it. So what you're talking about there is basic supply and demand. So if you are a buyer and there's more properties on market, but the number of buyers doesn't go up, you have more choice. Therefore, there's not as much positive upwards pressure on prices. So you might be able to get yourself pretty good buying during that period of time. That's what I'm waiting for, Tom.
Yeah. Can I ask you, when you buy a home, out of everything, what's more important to you? The suburb, the position in the suburb, the quality of the property? Like, out of everything, what's the one thing you won't compromise on?
Capital growth. That's
what you're after, isn't it?
Yeah, I don't really, the suburb, the property, the type of property, where it sits on a street, whether it's close to transport, that's all sort of, quite tactical type of stuff. Why I invest in property, Tom? I don't do it because I like investing in property. I invest in property because I want to make money out of property. And how do you make money out of property? Number one, your property goes up in value. You realize that equity growth at a point in time. Number two, you're generating cash out of it through the rent that you're generating through it. So that's positive, great. If it's negative, that's okay. You can use it as a tax position for a period of time. That's why I invest in property, and that's how I invest in property. Now, looking at a particular property itself and the specifics or particulars about it is pretty low down the pecking order. That said, to get capital growth, to one of our listeners there that just wrote in, it's got to be in the right location at the right time for the right reason. And that's property. It's simple.
And what's interesting, Phil, is I had the exact view, that my views changed. And it's not that your view's wrong and mine's right. It's what it is at various cycles in people's life, they actually value one thing more than another. So, example, I'm 54 years of age, and I've got a reasonable asset portfolio. And the way I'm looking at life now is that, hey, the more growth I have, that's great, but I don't want to sacrifice lifestyle over growth, because essentially what I'll be doing is passing on my death as inheritance the growth of those properties. And that's a good thing to do, leave a legacy, family, all of that. But at the same time, you don't want to spend the second half of your life compromising on your lifestyle for the purposes of growth, knowing you're not going to run out of money. Does that make sense?
Oh, yeah, mate. And what you're talking there is an inflection point. And I imagine every single property investor hits it. You got a few years on me, Tom. I've got still a little bit longer to go. But no doubt at some point in time, and it's probably not that far away either. What's that?
Am I allowed to ask you your age or not?
That's a bit rude, isn't it? How old do you reckon?
Well, you're obviously younger than me, because you've actually confirmed that, and I've actually just given you my age when I actually said I'm 54. So I'm going to have a pun and say that you're definitely in your 40s, and I'd say early to mid 40s.
Mid 40s, Tom.
Okay, so I've got 9 years of you, right?
Well, thereabouts.
So there's 9 years of wisdom that I've got, which is sort of saying there comes a point where you're going to turn around and you're going to say, hey, listen, I want to be able to have a great lifestyle. How am I going to have a great lifestyle? Being able to make money while I sleep. How do I make money while I sleep? Oh, well, I can make it through growth and I can make it through income. But the problem with growth is I can't utilize it as much. Unless, of course, and this is an incredible strategy, we might as well talk about it, because it is going to smart property investment. The buyer's agent, Chris Gray. So can I tell you Chris Gray's strategy? He does not live. So Chris Gray was on Sky News. He was also on the Renovator Show. He's a pretty high-profile buyer's agent, right? So Chris Gray's strategy is don't have a principal place of residence. He rents out. He rents, and he lives in a beautiful home in the eastern suburbs, and a home that he says he simply could not afford to buy if he had to buy it, but he can rent it. And then the way he looks at life is this. He wakes up on January 1 each year and looks at his property portfolio and says, if the market goes up 10% this year and I've got a property portfolio of 20 million, I've made $2 million on paper, right? $2 million on paper. That's the way that he, operates. And the work he does, buyer's work and, a bit of consultancy, that just gets him through he loves having a big drink, which I was going to say. Chris, if you're watching, I'll make sure that you see this. Chris has struggled more than anyone else out of COVID, because this guy here would go to the opening of an envelope, right? He just likes drinking, going out, networking, right? So he's been one of the victims of COVID, right? But Phil, the point I'm making is that at various phases in your life, people have got various strategies. One thing is for sure: the ideal, capital growth and high yield, that's gold. But I never actually.
It's the holy grail to get, and you don't often get them both together. You normally get one or the other. And I think as you go through an investing journey, you choose one over the other. And I think you're in a privileged position, Tom, that you can actually, at your age, you're not an old guy. I think you're halfway through your adult life, right? We've spoken about this.
Well, Phil, you get 4,000 You get 4,000 weeks in life. I did a video on that. 4,000 weeks is what we get. If you're going to live into your 80s, you're at 4,000 weeks. I reckon I'm at around at 3,000 weeks. I reckon I've got 1,000 weeks left.
So you're fortunate that you're in a position where you've started investing at the right time. And this is a really good message for our listeners there on smart property investment. You're smart enough and privileged enough to have started investing in the right time of life. So at this point of life, you can say, yeah, I don't need to chase growth anymore. You've got a lot of it, and that's therefore giving you choice. And for many people, that is the ideal in property investment. You now have the privilege of choice, and you get to action that choice however you want to action it. You know, some people choose to action it by growing more for vanity or for, you know, generational legacy issues or for whatever reason. But your choice is to, okay, I'm going to enjoy my 1,000 weeks that I've got left. I reckon that's pretty sage and smart way to go about doing things. So the message is start investing early. So when you get to a point like you are at Tom, you get to make that choice. I think that you've done well there, mate.
I've been blessed. I've had some incredible mentors along the way. And the best one was a guy I met in chemo. He changed my life, 45 years of age, very successful in financial services, had a net worth of around 150 million bucks. I was there on the last chemo session. He was told, they said, you're coming off chemo. We're not getting any results. That basically means that the end is near, right? They've run out of treatment options. And I'll never forget it, Phil. He said to me, mate, I really enjoyed your company because we were on the same cycle. He goes, I'm just going to give you a word of advice. He says, don't save your Grangers, drink them. And next thing he says is, listen, the goal in life is don't do what I did. And that is I'm leaving $150 million and I've lost a lot of months that I could have done things. Enjoy your life, mate. And I got to tell you, it was a profound. It had a profound impact. When he passed, Phil, I thought a lot about him, and I'd met his family. I'd met his whole family would come in and spend time with him at treatment. And I just thought to myself, it would really, really suck to actually be in your final days and know that you knew this information of not wasting your time, but you still didn't act on it, right? You still felt, man, I knew that I wasn't going to live forever. Why didn't I actually go off and start, enjoying my life? And it's had a profound impact. There have been so many times, Phil, where I think I've been a little bit more conservative in recent years on actually, various projects, investment for that, because I'm constantly having this pros and cons analysis in my head. If I do that, it means this, but here's the price that you're going to pay for actually getting it. And I think it's a very, very good exercise, because I think sometimes, Phil, here's another story I want to share with you. A developer I have a takeaway coffee with. He said to me, mate, when I was building duplexes, I was making as much money and had a better life than when I entered the world of building blocks of units of 30 and 60 properties. You start entering in a world of having mass amount of staff. You have to have a lot of the government involved, right? The commissioner is involved now with the way properties are built. And he goes, so you really got to think to yourself, why am I doing what I'm doing in property? Does it serve my life goals, or do I just think to myself, just do it, just keep growing? Does that make sense?
Oh, absolutely. I think you're fortunate that by experience, but also through your journey with some of your health challenges, you've been able to view your life through a different lens that often, if people don't actually have those things thrown at them, they don't get the opportunity to maybe rethink or recalibrate. But I think that's the way you're framing it, Tom, is very sage. And, for a lot of our listeners who are property investors, myself included, like, when is enough is the question, and it is, what is it, Newton's second law or whatever, for every action there's an equal and opposite reaction. To your point, if I take this on, what's in the other side. It's like a financial accounting, and we'll have a chat about some financial accounting. I was picking through the McGrath results the other day, Tom, but if you put an expense line in, a revenue line in, there's got to be an expense line somewhere. Everything balances out at some point. So I think property investors and people operating in real estate need to have very comfortable and confident relationships with themselves to think that way. And I think it's super mature, and I think you'll make better decisions as a result of it. So yeah, thanks for sharing that, Tom. That's good, mate.
And the other aspect in property investment that I never ever thought about, Phil, that does matter to me, and I've begun to realize, talking to a lot of commercial agents, it's a major thing for their buyers, is depreciation. So depreciation, like if you're buying let's call it a childcare, right? And let's assume that there's $3 million that's been spent to build a purpose-built centre or servo or anything, right? You turn around, if you're getting depreciation of $200,000 a year, that's $200,000 that comes off your taxable income, right? For many people, all the rent that is coming in on that asset is depreciated. It means you pay no tax on that rent. So there's a lot of factors, but you know what? I really do need to actually immerse myself in more property investment content, and I'm going to go off and do a bit of a binge on your Smart Property Investment podcast. And by the way, during lockdown, podcast binging has gone through the roof. A lot of people are binging. They don't sort of go from one podcast to the other. They just listen to like 20 episodes of the one podcast in one go, like a Netflix series.
Yeah, I get a real kick out of it, Tom. And sometimes I need to pinch myself. You know me quite well, and we've known each other for many years. But Smart Property Investment, for example, it's a podcast I do each week. I don't know, and I know you get a lot of viewers and people connecting with your stuff. I guess I don't know, 130,000 people listen to that every single month. And I sit there and I just think, wow, that's a lot of people who are all, and the good point of it is all those people are investing in their own education to make better property investment decisions for the purpose of giving them a choice at a point in time when they want to create a different life or slow down or move left or move right or whatever their choices is. But, Australians by and large have such an opportunity, irrespective largely of how much income you earn, to take control of their financial future and create wealth. You don't need to be a bazillionaire, but being able to control a more favorable retirement. And a lot of us will work till 50, a lot of us work to 60, a lot of us will work to 70 and 75. The age of death in Australia keeps getting pushed out. I think I've got young children, likelihood that they'll live to 100 years old. You've got to take control of your financial future. We spoke a few weeks ago why real estate agents often either blow all their dough and don't end up with anything, or they become sort of super rich because they're really smart investing in property. Teach your kids financial wealth, financial security advice, and I think they'll be okay. If you can pass it on to the next generation, more than a big chunk of money and equity in a property, I think you're doing a much better job as a parent.
Well, I had, during the week, there was the passing of one of the legends of real estate. I actually did a video on it. When I was a young kid, it was my first job in real estate. The guy's name was John Ausnet. You always remember your first employer if it ended up being a good experience. So Phil, Chambers Fleming, Padstow, the professionals, they're still there. They're making 40 sales a month, and they're one of the greatest businesses in the last 40 years. They're always number one or two in their network. The Suns have taken it over, but John Ausnet slipped, and I think he may have had another issue when he slipped, but passed away 2 or 3 nights ago. And I was reflecting to his son Todd last night. I said, your dad had a profound impact, because I said I was 19 or 20 years of age, and I had a Mitsubishi Magna when I was working as a salesman there. And I said, John, I'm just going off to buy a new car. I'm going to be gone for 2 hours. So I was going to be upgrading. I wanted to upgrade to an Audi, right, from a Magna. And Phil, John Ausnet said to me, listen, do what you want to do. Then he said, I'm going to give you a word of advice. Don't spend your money at this age on stuff made out of metal, because it goes down. Spend your money on stuff that's made out of bricks, because it goes up. And he goes, one day when you've got a lot of money and you don't care, then you can put your money towards the metal. And it was profound advice. He loved buying blocks of units, and we talked about, he still Dora Street, Hurstville. He owned a lot of properties, made a lot of money. But Phil, you mentioned the McGrath, which story that you carried.
Tom, mate, we're smack bang in the middle of all the reporting season now, so as well as property, I like to dabble on the stock exchange as well. So I like to immerse myself. I'm not an expert on anything in particular, but I sort of choose particular types of stocks that I like to follow, which are sort of connected in with the communities we operate within. Real estate being one of them, mortgages, or the defense and sort of security stocks and all that sort of stuff. And picking through the McGrath results recently, and Grace Ormsby, news editor on REB, has been doing some good reports on this. She came out and sort of reported on their results as they happen, and then she did a follow-up, I think yesterday or the day before, pretty much sort of having a look at this turnaround of McGrath. And I think they've sort of shifted gear by $10 million from a pretty big negative last year to, I don't know, $3 million this year. And she sort of went behind the scenes and worked out why is that the case. And no doubt, the booming property market's been a nice driver for most people operating in real estate, but it sounds like they've done some pretty smart stuff over there at McGrath, embracing technology in particular, which is good to see.
Yeah, so they're a publicly listed company, so these numbers, of course, public. They did over $18 million profit, which was a major turnaround. $18 million profit, and they said one of the contributors, of course, was what they've been doing in technology and a rollout of across their network, the CRM system Agent Box, as being one of the contributors towards that profit. And I have to say, Phil, that I adore Agent Box. I work with them. I know that they've taken sponsorship or advertising with you guys, but more importantly, the REB top 100 agents, they've got over 60% of those. 60% of the top 100 agents are Agent Box clients. But the concept here is this. It's very, very clear. Businesses that are robust, businesses that have got good sustainability, businesses that outperform the market seem to have used technology not to substitute them, but to complement them and to become a core focus of the way that they deliver efficiencies, effectiveness, and a predictable, repeatable, high-performance service to their clients, and that's CRM systems. But Phil, all bits of technology now, like I find it abnormal now on a Saturday when an agent says to me, "Oh, my client's not around. Can you sign the contract?" And I'll say, "Yeah, mate, just email it to me." And they say, "Oh, mate, we haven't got DocuSign." That was a year ago. Like I'd say, meet me. But now I said, "Mate, DocuSign it." And they say, "Oh, no, we don't have a DocuSign." Or I say, "Well, you better get it, or you better get Adobe Sign, or you better find some other sort of thing, because it's just crazy to drive 1.5 hours to meet someone, to sign a contract, and still be doing it in a time that we've got COVID-19, right? Just doesn't make sense." And I know, Phil, technology is something that you guys at REB are trying to drive through the industry. It's a core part of your business.
Oh, absolutely. And we're right behind PropTech. And we've done some stuff together, Tom, out and about when we're allowed to, talking about high-tech, high-touch agents, how technology is an enabler for everyone operating in property into the future. I just actually noticed I'm wearing a PropTech shirt, managed there today. That was not deliberate by any means, but we're both looking pretty tech today, Tom. We've got the black shirts on, looking sharp.
Yeah, no, you're more so. That's you're more so that managed top managed. By the way,
by the way, that's not a deliberate. I deliberately didn't do that, everyone. But anyway, I'll take it. It's a nice little
sweetie. No, iron the black shirt. Iron the managed shirt. It's Thursday. It's the live stream day.
Quick, get it off. Normally I'd wear a Momentum Media one, but I dress it a bit further down. I'm dressing more tech these days, Tom. But Oh, look, it's great to see McGrath post those numbers. I've been watching that stock since it listed. And you mentioned Angel Box there. The majority, of REB top 100 agents use that particular platform. I'd also note, and I got a real kick out of it when I initially looked through the McGrath prospectus at the time of listing, that one of their points for one of the reasons why it was one of the best real estate organizations around is that it had more agents on the REB top 100 agents than any other group. I think it was like 30 or 32, 33 at the time of when they listed. So, as a measurement, the REB top 100 agents, it's a good benchmark. But McGrath doing that turnaround, there's a relatively new CEO in the seat there. They seem to have got their stuff humming along, and McGrath 2.0 on the stock exchange looks like we're pushing ahead. I actually bought some shares the other day. Let's see how it goes.
Yeah, well, I've got to say to you, they've turned it around. I think obviously what they've done. I'm pretty sure the sector has performed pretty well as well, Phil. The real estate industry sector has performed reasonably well during that period.
I've got the article here, Tom, on realestatebusiness.com, and I know you do a podcast with John. You've been doing that for many years. Both of you guys sharing your insights. It's full year results, posting a return in the black for earnings and 11% improvement of revenue. Tom, a statement of shareholders, McGrath highlighted earnings before interest, taxes, depreciation, amortization, EBITDA was $3.7 million for the year, which is a $10.1 million turnaround from underlying EBITDA loss last year of $6.4 million. Calling turnaround significant. The real estate agent posted 11% lift in revenue, $91.69 million. So, it's good to see McGrath shifting the needle. Also, there's a number of other listed real estate agents out there. The agency, for example, they're doing pretty well. So I think it's good to sort of reflect on these numbers as they come out, but it doesn't discount the inherent value of real estate agents in Australia, mate, which are technology enabled. Get stuck into it. I think we're going to be able to attract plenty of good people in this industry for the years ahead.
Now, Phil, the last topic we're going to touch on today is a topic that I've noticed it. I've noticed it anecdotally, and it has been validated by data. And a lot of the real estate industry is tired. They're tired. Example, Melbourne. 7 out of the last 8 weeks in lockdown. Last year, 17 weeks in a row in a hard lockdown. Hard lockdown means no property inspections, no listing presentations. We're talking homeschooling. We're talking being in a room, not being able to go outside apart from 1 hour of exercise a day, and sitting there at a press conference each day to have a look at when will we be able to start doing something, right? So people are getting fatigued. People are getting tired. And you swing across, various parts of the country now in lockdown. It appears that, the place that has been, pretty much unaffected now, because, even Byron Bay, I was talking to my friends in Byron Bay, they're in a true lockdown there. All regional Australia's in a lockdown. People are getting tired and people are getting fatigued. And yet the reality is, Phil, there is no clear answer to this because the genie's out of the bottle. 1,000 cases, right? So I can see that what the government is doing. This balance. I'm just curious. Like, Phil, what are you doing to cope yourself with the repetition of day in day out blurring itself? You got this blur. Often I'll forget. We just come into a weekend or we're coming off a weekend, right? What about yourself? What are you doing?
Well, routine's pretty important, Tom.
You're going into the office every day, right?
Yep, absolutely. So routine is important, and whether or not it's COVID lockdown or otherwise, I'm a big proponent of routine. I set a particular way of operating and I maintain it because it gives you quite a lot of control. To be fair, Tom, it's not once, I haven't even really thought about it until having this conversation. It's not once through this period of this lockdown where I've gone, oh, this ain't too good, or oh, this is, I'm not happy about this, or I don't feel great about that. Inherently, it's not the way I'm wired, and I think it's because I'm quite structured now. I go about doing stuff. I come into work every day, and I'm busy at work. I cover a lot of ground. I'm involved in a whole bunch of different things. But I'll tell you what, so when I walk out that door and into the lift, I leave work at work, and then I have my home, and my home is my home, and I have a great home life. Highly engaged, super connected. We do it well. So, just having that mechanism of routine is absolutely critical. And I'd sort of say to everyone, embrace some level of routine. Don't just get stuck in the whole idea of a Groundhog Day. When some people will say, well, isn't that what routine is? No, routine is structure. It means that you can concentrate on the stuff that you need to concentrate when you need to concentrate on it. But I'm probably pretty good at compartmentalizing stuff as well. I only worry about things once, whereas I think a lot of people worry about worrying about something. And I think that could manifest itself in a very different way, which isn't positive to anything. So, just worry about stuff when you need to worry about it.
Yeah, worrying about something is like walking around in the sun with an umbrella, right? Has no purpose, but you're just sitting there. Oh, but what if it rains? But you did say something there profound, and that is the minute you get in the lift, you know that's it. And I think for the majority of the people at the moment who are working at home, they need a circuit breaker to their day. They need to be able to sort of say, okay, that's a line in the sand. This is finished now. That was work. This is not work. And for me, Phil, it is a glass of red wine. So what happens is the last appointment, I get a glass of red wine and I say, that's it. That's the end of work. But yesterday I was faced with the situation where I got the email coming in saying, don't forget the story's due tomorrow morning. So the story was written after I'd had a few glasses of red wine. But
hence better prose. But just to be like, circuit breaker is important. You need that interface between work and not work. And you can, and that Tom is routine. Like that is part of your routine. And that's what I mean by routine. You need to have these triggers through your day to help you pivot and transition from different things. I know some medical people and mental health advocates would probably say that, wine as a circuit breaker might not necessarily be the best thing, but, I think it's okay. But, it's a way to sort of trigger from left to right. It works well, but, a lot of people are struggling right now. You've got a pretty vibrant family life. You're busy at home. You've got plenty of people around. There's plenty of things to engage you. I do have a lot of sympathy, concerns for, those people who live by themselves, who are quite isolated. It's very challenging at the moment. And there's little things the government's been put in, like buddy programs where you can have a buddy. I think that's really good. But, I think we're all can do one thing, is that reach out and connect with friends and colleagues and just stay there and stay in tune and stay connected. And, this thing will end, mate.
Gold. Guys and girls, if you are going through a challenging time, difficult time, let me just say to you, reaching out versus going inward is the thing to do. Don't hide your feelings. Speak to people. There's plenty of telephone counselling support services that you can ring, Lifeline and what have you. Speak to colleagues. But I think really most importantly, Phil, you've got to remember that old Buddhist philosophy, and that is don't get attached to the now. It's not permanent. All you've got to do is open up and see what's going on overseas. People have moved on. They're working. Most countries appear to be living with the virus. They've got to the number that allows them to live with the virus. So all I would say to people, if you are going through a difficult time, it's really, really important to understand things that Phil talked about. Routine, exercise is definitely a very important thing. Getting outdoor and reaching out to people and have a great attitude of gratitude. Because I've got to say, Phil, I overheard someone when I was picking up my coffee. One guy looked across at the bay run. He goes, mate, you wouldn't be dead for quids. If this is the worst thing about a lockdown, as he looked around the water, and then someone else said, yeah, things are pretty good here, but if you were living in a 2-bedroom unit in Liverpool with 3 kids and no balcony, homeschooling, without having an income coming in, it would be quite different. I think you've got to be
very different.
I think you've got to be empathetic, you know?
Yeah. And I think the thing, just to conclude with this, Tom, it's okay to go, oh, this is a bit crap at the moment. It's okay to feel a bit crap about stuff. You know, that is a human natural condition to think that. It's just when that becomes persistent and endearing is when you probably need to start thinking about, you know, changing it in some way or another. And to your point, there's a lot of very good areas and help forums and mechanisms for helping you shape a more positive mental approach to stuff. So if you start going down that pathway, you should really reach out.
Bill Tarrant from REB and Smart Property Investment, Tom Panos from the Real Estate Gym, coming together every Thursday to jib-jabber away about, you know, real estate. COVID obviously is a big part of it. Property investment, things that we're just passionate about and things that we're living through each day. Phil, have a good week.
You too, Tom. See you, mate.
See you later. Bye-bye. See you, viewers.